The subcommittee is meeting today to consider H.R. 5840, the Insurance Information Act of 2008, H.R. 5611, the National Association of Registered Agents and Brokers Reform Act of 2008, H.R. 5792, the Increasing Insurance Coverage Options for Consumers Act of 2008, and the committee print of the Securities Act of 2008. The Chair strongly encourages members to submit opening statements for the record, and without objection, all members may do so. The Chair recognizes himself for 5 minutes for a few opening remarks. We meet today to consider 4 important bills that have strong bipartisan support. I want to thank the members and staff of both sides of the aisle for working cooperatively on these matters in recent months. The first bill that we will consider is H.R. 5840, the Insurance Information Act of 2008. I introduced this legislation in mid-April with Ranking Member Deborah Price, Congressman Dennis Moore, Congressman Ed Royce, and Congresswoman Melissa Bean. Our bill promotes an idea which I have long held, that the federal government should have an in-house expert on insurance policy matters. To that end, the bill would create an Office of Insurance Information within the Treasury Department. In addition to providing needed advice on insurance public policy matters to both Congress and the administration, the office will coordinate federal efforts and establish federal policy on international insurance matters. To promote such federal policy, the Treasury will have the ability, under very limited circumstances and very detailed procedures, to preempt a state insurance measure that is inconsistent with an international agreement regarding the policy. We have achieved a unique balance, gaining the support of many diverse interests in the insurance world for this bill. As the Council of Insurance Agents and Brokers has observed, H.R. 5840, quote, breaks the impasse on the federal versus state regulatory battle of recent years, unquote, and that, quote, that its enactment would be a major move forward, unquote. In short, I strongly urge my colleagues to support the manager's amendment that I will offer today, as well as the final passage of this important legislation. Second, the subcommittee will take up H.R. 5611, the National Association of Registered Agents and Brokers Reform Act of 2008. Congressman David Scott of Georgia and Jeff Davis of Kentucky introduced H.R. 5611 to complete the reform of state insurance agents and brokers licensing started under the 1999 Financial Services Modernization Law. Specifically, the bill would create the National Association of Registered Agents and Brokers to establish minimum licensing standards through which an insurance agent or broker licensed in one state could automatically receive an agent or broker's license in any other state. We are bringing this bill forward today because the state insurance regulators and key agent groups like the Independent Insurance Agents and the Brokers of America, the National Association of Insurance and Financial Advisors, and the Council of Insurance Agents and Brokers work together to find a consensus. I appreciate their hard work in developing this compromise. Third, we will consider H.R. 5792, the Increasing Insurance Coverage Options for Consumers Act of 2008. Congressman Dennis Moore and Subcommittee Ranking Member Deborah Price introduced the bill in April. H.R. 5792 would reform and expand the Product Liability Risk Retention Act by allowing risk retention groups to provide commercial property insurance to their members and requiring all risk retention groups to implement minimum corporate governance, disclosure, and financial reporting standards. As with the other 2 insurance bills we will consider today, H.R. 5792 is also consensus-driven. I have long advocated the need for consensus in this area of insurance regulatory reform. I therefore urge my colleagues to give their full support to each of these measures. Finally, we will take up committee print of the proposed Securities Act of 2008, which staff has worked on a bipartisan basis to develop. This legislation seeks to modestly improve the enforcement authority of the Securities Exchange Commission and to advance investor protection. Both of these goals are important, and the bill is especially timely given the current state of our capital markets. A majority of the provisions in this bill have been recommended to the Congress by the Commission. Also, several of the sections of the bill have previously passed the House or the Financial Services Committee, and the measure contains bills or sections of bills drafted by both Republicans and Democrats. I consider most, if not all, of the provisions of this draft bill to be non-controversial. Like the three insurance bills, we have worked in the bipartisan manner in preparation for today's markup in the hope of achieving consensus. We have received support from a number of interested parties, including the North American Securities Administrators Association. As a former member of this panel and the current chairman of the Commission has also noted in his letter supporting this bill, the Securities Act of 2008 will, I quote, increase the effectiveness of the Commission's major operational programs, unquote. As such, I urge my colleagues to support this legislation too. In closing, I want to thank my colleagues for participating in today's markup and supporting our efforts to move forward on these four important legislative matters. And with no further ado, I now recognize the ranking member for his opening statement.
Well, I am sitting in for the ranking member, Deborah Price, and Mr. Chairman, I thank you for holding today's markup, and thank you for the careful bipartisan deliberation you have demonstrated throughout the committee's consideration of this issue. I also want to commend Congresswoman Price, the ranking Republican on this subcommittee, for her hard work to bring forth these bills. Mr. Chairman, I want to indicate my support for all bills being considered today. Today's insurance reform bills are the result of 4 hearings and negotiations with all the stakeholders and represent, I believe, a careful balance between those who believe the federal government should be more involved in insurance regulation and those who believe states should maintain jurisdiction over insurance regulation. The first would create an Office of Insurance Information within the Department of Treasury. That would be granted very limited, targeted authority to help the U.S. comply with certain international agreements. The second bill would allow risk retention groups, which allow manufacturers to self-insure against product liability claims, to offer certain commercial property insurance coverage, in addition to establishing general corporate governance standards for these entities. The third bill would create the National Association of Registered Agents and Brokers, or NARAB, which would create a place where insurance agents and brokers who are licensed and in good standing in their home states can go to obtain non-resident licenses in other states. The legislation will ensure states preserve their right to establishing license fees. All 3 bills are carefully balanced, limited insurance reform. The final bill will enact the majority of the SEC's legislative requests submitted to Congress in 2007 and 2008. The requests will enhance SEC's operational programs and administrative functions and are worthy of our support. The bill includes 3 common-sense pieces of legislation introduced by Congressman Jeffrey Davis, Gregory Meeks, and Peter Roskam, already approved overwhelmingly, and a portion of a bill offered by Representative John Campbell. Most importantly, this bill amends the Securities Investor Protection Act, SIPA, and creates a clear pathway for the SEC and the Commodity Futures Trading Commission, the CFTC, to follow in order to realize a state-of-the-art portfolio-based marginal system for customers of broker-dealers. The SIPA amendment would extend Security Investors Protection Corporation insurance to security futures provisions held in a portfolio marginal account under an SEC-approved program, thereby significantly advancing the goal of risk-based portfolio margining. Congratulations to you, Mr. Chairman, and to our ranking member for carefully crafting these bills in such an open and bipartisan manner. With that, I yield back.
Thank you very much, Mr. Shays. Now I recognize the gentlelady from Illinois, Mrs. Bean.
Thank you, Mr. Chairman. Thank you for the opportunity to speak and for your leadership on H.R. 5840. I know you've worked hard to address the diverse concerns of all interested parties, and in doing so, have crafted a bill that achieves broad consensus. As an original co-sponsor, I'm strongly in favor of establishing the OII. I see this as a vital step towards providing greater industry agility and a modern regulatory alternative to the antiquated and burdensome system of state insurance regulation. That said, while I commend H.R. 5840, I must also voice my opposition to H.R. 5611, which arguably could benefit agents but would not increase choice or access to consumers. In contrast, H.R. 5840 sets us on a solid path towards comprehensive insurance reform and, in my estimation, helps lay a solid foundation for an optional federal charter that will not only benefit consumers but maintain the preeminence and competitiveness of the U.S. capital markets. Thank you, and I yield back.
Thank you, Mrs. Bain. Are there any other further opening statements? If there are no further statements, the committee will proceed to consider the subcommittee's agenda. The subcommittee will now consider H.R. 5840, the Insurance Information Act of 2008. The clerk will report the bill.
H.R. 5840, to establish an Office of Insurance Information in the Department of the Treasury. Be it enacted by the Senate and House of Representatives of the United States.
Without objection, the bill will be considered as read and open to amendment at any point. The chair recognizes himself for the purpose of offering an amendment in the nature of a substitute. The clerk will report the amendment.
Amendment in the nature of a substitute to H.R. 5840, offered by Mr. Kanjorski of Pennsylvania. Strike all after the enacting clause and
without objection, the amendment in the nature of a substitute is considered as read and as base text for the further amendment. The chair recognizes himself for 5 minutes to explain the amendment. Since the introduction of 5840 and the hearing last month, we have worked with all interested parties in improving the legislation. This manager's amendment makes those enhancements to the bill. First, the manager's amendment provides strong confidentiality and privacy protection to the data information that flows to the office. The manager's amendment also clarifies that the office can receive insurance data from state regulators and private sources in the insurance industry. The process regarding the preemption of an inconsistent state insurance measure is greatly clarified and refined, too. Specifically, the manager's amendment provides the director who heads the office with a thorough notice and comment process to follow with regard to whether a state insurance measure is inconsistent with federal policy as entered into an international agreement. Additionally, the Secretary has the responsibility to determine if such an inconsistent state insurance measure shall be preempted or not. The Secretary must stay the preemption in a number of circumstances. The manager amendment also gives the Congress the opportunity to object to any preemption of an inconsistent state insurance measure. Additionally, the legislation as improved by the manager's amendment will explicitly state that the Administrative Procedures Act, including judicial review, applies to the preemption process. In addition to these reforms, the manager's amendment adds additional representatives to the advisory group, including a state representative, a legislator, and representatives from specific sectors of the insurance industry. At this time, I also request unanimous consent that 2 small technical amendments be made in the manager's amendment, which have been brought to our attention. On page 9, line 16, the term director should be replaced with secretary. Second, on page 5, line 17, the term including shall be replaced with as included in. Without objection, is so ordered. In sum, these changes greatly improve the bill and address many of the concerns raised by members. I encourage the subcommittee to support the manager's amendment and the final passage of this legislation. I yield back the balance of my time. Is there a further debate on the amendment?
Mr. Chairman, just to say that we support your manager's amendment and the other changes suggested.
Are there other amendments?
Mr. Chairman, I believe I have an amendment at the desk.
Do you want to pass this one first? You need to pass this one first.
Wait, we're going to report on our amendment first.
We need to deal with this amendment first.
Okay, the clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 5840 offered by Ms. Spear of California. Page 6, strike lines 17 through 20 and insert the following. E, determinations of inconsistency of state insurance measures with federal policy. 1, standard, subject to paragraph...
Without objection, the reading of the amendment is dispensed with, and the gentlelady is recognized for 5 minutes in support of her amendment.
Thank you, Mr. Chairman, for the opportunity to speak on the amendment. I am offering this amendment for a number of reasons. The first being that the existing measure with the manager's amendment does cede authority from Congress. And this particular amendment would retain the authority of Congress to act if, in fact, there is a need for preemption. What the bill presently does is really place in the hands of the Secretary of Treasury the authority to determine whether or not there is a need for preemption of a state law. Now, in California, where I am from, we have a very robust Department of Insurance. We have an independently elected insurance commissioner, and for 8 years, I chaired the Senate Financial Services and Insurance Committee. So I fully appreciate the interest of the chair and the co-authors of this bill to create the Office of Insurance Information, but as we all appreciate, it is still a state function. What this particular amendment would do is prevent a preemption of a state law taking place without Congress actually acting upon it. And let me just give you an example of what could happen. In California, we have an initiative that passed many years ago called Proposition 103. I'm certain Mr. Campbell certainly remembers that. And that actually regulates the insurance rates for auto and property. There could conceivably be a situation where an international agreement would suggest that preemption would be in order because of the agreement that has been reached and could have the effect of overturning Proposition 103. Now, that may in fact be somewhat remote, but nonetheless it does create that avenue. This particular amendment would prevent it from taking place without Congress first taking action to allow for the preemption to take place. Mr. Chairman, we've had a conversation about this, and I have indicated that with unanimous consent I will withdraw the amendment, understanding that we will work together in an effort to try and tighten the reference to international agreements so that that kind of situation would not happen in the future.
Look forward to working with the gentlelady. And I take that as a request for a withdrawal of the amendment this time?
It
no
is.
Objection is so ordered. Are there any further amendments? Gentleman from Georgia.
I have a manager's amendment. We're not ready for that?
Okay. What? Okay. We'll get to you, Mr. Davis, on the next one. There are no further amendments to the amendment in the nature of a substitute. If not, without objection, the previous question is ordered, and the question now occurs on agreeing to the amendment in the nature of a substitute as amended. All those in favor say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the ayes have it, and the amendment is agreed to as amended. The question now occurs on approving the bill as amended and forwarding it to the full committee or the House with a favorable recommendation. All those in favor shall signify by saying aye. 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 All those opposed, nay. In the opinion of the chair, the ayes have it. The ayes have it, and the bill is agreed to and ordered reported to the full committee or the House with a favorable recommendation. Without objection, the staff is authorized to make technical and conforming changes to the bill approved by the subcommittee. The subcommittee will now consider H.R. 5611, the National Association of Registered Agents and Brokers Reform Act of 2008. The clerk will report the bill.
H.R. 5611, to reform the National Association of Registered Agents and Brokers and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America in Congress assembled, Section 1, short title.
Without objection, the bill shall be considered as read and open to amendment at any point. The chair recognizes the gentleman from Georgia, Mr. Scott, for the purposes of offering an amendment in the nature of a substitute. Mr. Scott?
Yes, thank you very much, Mr. Chairman. And let me start off by thanking you and the ranking member for the help and assistance you've given to us with H.R. 5611, which is the National Association of Registered Agents and Brokers Reform Act, which I am delighted to work with my good friend on the other side of the aisle, Representative Davis from Kentucky. And what we're attempting to do is just simply help ensure adequate agent and broker licensing, as well as ensure increased competition, which certainly in the end our goal is to make a major benefit to the consumer. Insurance regulatory reform is an issue many involved agree requires action, and this bill is a good starting point for leveling the playing field for insurance agents and brokers. Simply put, House Resolution 5611 establishes the National Association of Registered Agents and Brokers, which we refer to as NARAB, to provide for non-resident insurance agent and broker licensing while preserving the rights of states to supervise and discipline insurance agents and brokers. My manager's amendment clarifies the current state consumer protection and market conduct regulation, that it would be preserved, and changes the balance of NARAB's board members to a very narrow majority of state insurance regulators. This amendment also requires bylaws and reports of the association to be filed with the National Association of Insurance Commissioners and directs the NARAB board.
Mr. Scott, if I may interfere with your statement for a moment, I did not call the clerk to report the substitute amendment, so if the clerk will kindly make a report of the substitute amendment.
Amendment in the nature of a substitute to H.R. 5611, offered by Mr. Scott of Georgia. Strike all after the enacting clause and insert the following. Section 1, short title.
And now, without objection, the amendment in the nature of a substitute is considered as read and as a base text for the further amendment. The chair recognizes Mr. Scott now for 5 minutes to explain the amendment, but we include therein the previous 2 minutes that he started to proceed to explain the amendment. Now, Mr. Scott, if you will.
No problem, Mr. Chairman, no problem. Basically, as I said, we certainly want to make sure the amendment would require all the bylaws and reports of the association to be filed with the National Association of Insurance Commissioners, and it directs the NARAB board to consider utilizing the National Association of Insurance Commissioners as the entity that the association will collaborate with on a central clearinghouse and a national database for regulatory information. And finally, the amendment clarifies the purpose and scope of this bill so that it is clear that this legislation does not govern resident producers and that it will not produce a net loss of producer licensing revenue to the states. My amendment further clarifies that NARAB would not become a vehicle to avoid paying the states their licensing and appointment fees. Again, the NARAB Reform Act does not affect day-to-day state oversight and regulation of resident producers. It is only intended to address marketplace entry for non-resident producers. This legislation is straightforward. Insurance agents and brokers who are licensed in good standing in their home states can apply for membership to the National Association of Registered Agents and Brokers, referred to as NARAB, which will allow them to operate in multiple states. Membership being voluntary and not affecting the rights of a non-member producer under any state license. Our legislation will benefit policyholders by increasing marketplace competition and consumer choice by enabling insurance producers to more quickly and responsibly serve the needs of consumers. The NARAB Reform Act has garnered support from both sides of the aisle, both Democrat and Republicans, with 48 bipartisan co-sponsors. 27 of those members serve on this Financial Services Committee. Again, I am pleased to work along with my good friend and colleague, Congressman Davis of Kentucky, on this legislation, which again simply narrowly targets only the area where there is a problem. This manager's amendment has been endorsed by the NAIC, showing that the state insurance regulators believe that this type of legislation is definitely needed reform. Other groups that support the bill include the Independent Insurance Agents and Brokers of America, the National Association of Insurance and Financial Advisors, the National Association of Mutual Insurance Companies, the Property Casualty Insurers Association of America, and the Council of Insurance Agents and Brokers, as well as a number of individual insurance companies. And as I said before, I'm very proud to have had an opportunity to work along with all of my colleagues on the committee, and certainly our leadership, and I appreciate your personal help on this, Mr. Chairman, on this important legislation, which again simply narrows targets only the areas where there is a problem. And I am energized over the prospects of this bill, and I want to thank the committee and you, Mr. Chairman, and Ranking Member Bacchus for your support. And I yield back the balance of my time.
Thank you very much, Mr. Scott. And now we'll hear from Mr. Davis on the amendment.
Thank you, Mr. Chairman, and I'd like to thank you, Chairman Kanjorski and Ranking Member Price, for including H.R. 5611 in today's markup. I think we can all agree that the bills we're talking about today represent meaningful and targeted reform measures to improve the way a number of components of the insurance market operate. I especially want to thank my good friend from Georgia, Congressman Scott, for his work on the NARAB Reform Act and on this amendment. We've got now, as he mentioned, nearly 50 co-sponsors, many of which are from this committee. And frankly, his professional experience in the business world was critical in helping to craft this bill as a practical method of reform. My entry point into this came as a small business owner who had 8 employees in 6 states when I went to get insurance for my company and found that I suddenly had to deal with 6 different insurance brokers in order to get one policy for one tiny consulting business. It made no sense crossing state lines for what was an issue, and now I find myself in the interesting position in Congress to be part of a solution working on with my colleague on this. As you all know, Gramm-Leach-Bliley would have created NARAB in the event that the states did not satisfy the producer licensing reform objectives outlined in the underlying bill. Ultimately, the states were perceived to have achieved a specified level of licensing reciprocity, and NARAB was never created. In my own experience, that didn't come to pass in our region of the country. Nearly 10 years since the passage of Gramm-Leach-Bliley, we're still in need of progress on this issue. H.R. 5611 mandates the creation of NARAB. The board's purpose and functions will be generally the same as the NARAB provision in Gramm-Leach-Bliley. In short, agents and brokers licensed in good standing in their home state and meeting NARAB member criteria will be able to join NARAB. NARAB members would still pay the appropriate fees required by each state in which they are licensed. NARAB would not have federal regulatory authority. I appreciate the hard work of industry groups to come to a compromise on H.R. 5611, and in particular the NAIC for their invaluable knowledge on the issue and substantive suggestions for ways to improve the bill. The primary change made by this substitute amendment that we'll consider today is the size of the board. It will increase the size of the board from 9 to 11, giving 2 additional seats to the state insurance commissioners for a total of 6 seats. We all recognize that the insurance commissioners have a wealth of knowledge and experience on the issues the board will encounter. And with the adoption of the substitute amendment, they'll hold a majority of positions on the board. I just want to thank again Chairman Kanjorski and Ranking Member Price, Chairman Frank, and Ranking Member Bacchus for including this bill in the markup and moving it forward. It's a practical change that gives relief to the small business community and to brokers nationwide. And again, I thank my colleague David for his great work on this, and I yield back.
Thank you, Mr. Davis. Is there any further debate on the amendment?
Mr. Chairman.
The gentlelady is recognized.
Mr. Chairman, I would just like to indicate my opposition to the measure. It really is targeted at 7 states because 43 states, to my understanding, have embraced the Gramm-Leach-Bliley Compact. And of those 7 states, California is one of them. We have, again, a very robust regulatory scheme for licensing agents and brokers. I find that by opening this up to individuals outside the state of California and giving them reciprocity immediately, they are not going to be prepared, in my view, to respond to the consumer protections that we have in our laws unless they study those laws and then are tested for them. Thank you.
Are there further? Yes, gentlemen.
Thank you, Mr. Chairman. Since it's a fairly rare occasion on this committee, I thought I would take the opportunity to compliment the gentleman from Georgia for his legislation, since we are rarely in agreement on issues in this committee, but we're certainly in agreement on this issue. So I want to compliment him and the gentleman from Kentucky for their work. Anything that at the margins will reduce regulatory cost and the regulatory burden will increase competition, ultimately inure to the benefit of the consumer. I'm particularly coming from a state like Texas, where we have some of the highest insurance rates in the nation. I welcome this as a positive step and compliment the 2 gentlemen on their work. With that, Mr. Chairman, I yield back.
Are there any other comments on the amendment? If there are no further discussion, without objection, the previous question is ordered and the vote occurs on the amendment. All those in favor shall signify by saying aye. Aye. All opposed, no. The ayes have it, and it appears to have it, and the amendment is agreed to. Are there further amendments to the amendment in the nature of a substitute? If not, without objection, the previous question is ordered, and the question now occurs on agreeing to the amendment in the nature of a substitute. All those in favor say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment is agreed to. The question now occurs on approving the bill as amended and forwarding it to the full committee or House with a favorable recommendation. All those in favor shall signify by saying aye. Aye. All those opposed, nay. In the opinion of the chair, the ayes have it. The ayes have it, and the bill is agreed to and ordered reported to the full committee or the House with a favorable recommendation. Without objection, the staff is authorized to make technical and conforming changes to the bill approved by the subcommittee. The subcommittee will now consider H.R. 5792, the Increasing Insurance Coverage Options for Consumers Act of 2008. The clerk will report the bill.
H.R. 5792, to amend the Liability Risk Retention Act of 1986 to increase insurance competition and available coverage for consumers.
Without objection, the bill shall be considered as read and open to amendment at any point. The chair recognizes the gentleman from Kansas, Mr. Moore, to offer an amendment.
Mr. Moore, I do have an amendment at the desk, Mr. Chairman.
The clerk will read the amendment.
Amendment to H.R. 5792 offered by Mr. Moore of Kansas. Strike paragraph 3 of section 2. Page 2, lines 14 through 19. Page 4, strike line 12.
Without objection, the reading of the amendment is dispensed with, and the gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Mr. Chairman. Today I ask for the committee's support in passing H.R. 5792, the Increasing Insurance Coverage Options for Consumers Act. I introduced this legislation with my friend and colleague and the ranking member of the subcommittee, Deborah Price, along with the bipartisan support of Mr. Campbell and Mr. Klein. H.R. 5792 could have a modest but important effect on increasing capacity in the commercial property insurance marketplace for those who need access the most. The breakdown of product liability tort law led to an insurance availability crisis in the mid-'70s. The insurance industry responded to the product liability risk crisis by increasing rates, not renewing coverage, and avoiding policyholders that sold products the underwriters considered hazardous. In response to recurring shortages of liability insurance, Congress passed the Products Liability Risk Retention Act in 1981. The Act authorized a group of similar businesses with similar risk exposures to form risk retention groups to self-insure those risks on a group basis and created risk purchasing groups to allow insurers to market on a group basis. In 1986, the Act was amended into its present form to include all types of liability coverage while also providing the RRGs, and the RPGs would be regulated primarily by their domiciliary state, with only limited regulatory oversight by non-domiciliary states in which the groups operate. A 2005 study, Mr. Chairman, conducted by the GAO found that RRGs have had an important effect on increasing the availability and affordability of commercial insurance for certain groups with limited access to insurance, such as medical malpractice insurance. But the GAO also found that the Act's partial preemption of state insurance laws has resulted in divergent state standards and limited regulator confidence in the system. First, our legislation would take several steps to address the shortcomings identified in the GAO report for these groups by strengthening the regulatory reliability of RRGs. These steps include codifying uniform corporate governance standards proposed by the NAIC, strengthening safety and soundness requirements, enhancing disclosures and financial accounting standards for RRGs, and establishing a fiduciary duty for an RRG's board of directors. These important changes will ensure that the interests of the management of risk retention groups and the members will be aligned. Additionally, recent catastrophic events such as Hurricane Katrina and the 9/11 attacks led to a temporary affordability and availability crisis in the property insurance marketplace in affected areas, similar to the problems we saw with products liability in the 1980s. Our legislation will build upon the success of RRGs and RPGs in improving capacity in a number of sectors in our economy like malpractice insurance, higher education, and public housing by expanding coverage to commercial property insurance. This will add much-needed capacity to the commercial insurance marketplace by improving competition, which will lead to more affordable and available coverage. Some have questioned the need to expand coverage under RRGs and RPGs to commercial property given the relatively soft market we're currently experiencing for this coverage. I believe, though, that the time is now, before we experience another hard market for commercial property insurance, to expand Liability Risk Retention Act to include property coverage. I want to read a brief excerpt from a letter of support from the legislation I received yesterday from the Consumer Federation of America. The letter reads, quote, "Expansion of the RRA to cover property damage could also help companies, especially small and mid-sized firms, to insure against future terrorism losses. Even firms, office buildings, and public facilities with high exposure to terrorism risk could benefit. Expansion of the RRA to cover property would offer airlines, for example, the opportunity to spread risk and cover potential terrorism losses from property as well as liability," end quote. Mr. Chairman, I ask unanimous consent that this letter be submitted into the record. In addition to support from the Consumer Federation of America and the bipartisan support this legislation enjoys on this committee, 5792 also has the support of a broad swath of the insurance industry, including the Property Casualty Industry Association of America, the Council of Insurance Agents and Brokers, as well as public housing authorities, realtors, and nonprofit groups. Mr. Chairman, I intend to offer an amendment that will clarify the intent of the sponsors in certain sections of the legislation as well as make improvements following our lengthy discussions with a number of interested parties. First, the definition of commercial property will be amended to make clear that personal lines of insurance and workers' compensation insurance are not eligible types of coverage to be offered by RRGs, and to ensure that nonprofit agencies and governmental entities are eligible participants in RRGs. I've heard some concerns, Mr. Chairman, over the last couple of days that even with this change in the definition, it may still be necessary to further clarify that personal property is not covered under the legislation. As we move to the floor, I'll work with interested parties to clarify this definition. Second, the amendment strikes current sections dealing with RRG participation in state guarantee funds, which will leave in effect current law prohibiting RRGs from participating in state guarantee funds. Additionally, my amendment applies the new corporate governance standards to all new and existing RRGs, regardless of the type of coverage they're offering. The amendment also strikes language in the original bill concerning a non-domiciliary state's ability to issue cease and desist orders on RRGs and replaces this language with a GAO study on whether non-domiciliary states are using this authority appropriately. Finally, My amendment ensures that states have the flexibility to waive the Act's minimum size and sophistication requirements for charitable trust pools under Section 501N of the IRS Code where appropriate. Mr. Chairman, these changes and the underlying legislation represent important reforms that will help protect consumers participating in risk retention groups while also improving coverage availability in the commercial property insurance marketplace. I urge my colleagues to join me in passage of these important reforms. Thank you, Mr. Chairman.
Thank you, Mr. Moore. The gentleman from California, Mr. Campbell, desires to speak on the amendment.
Thank you very much, Mr. Chairman. First of all, on behalf of Ms. Price and myself, I'd like to thank Mr. Moore and Mr. Klein for their work on this bill.
Thank you.
And I think, Mr. Moore, you did a very good job of laying out the basics of what the bill does and so forth and why it is needed. But if I can just add a little experience from my home state of California, you mentioned that insurance, commercial property coverage had become difficult to get after 9/11 and after Katrina. Well, in California, where we have not had a major property damage earthquake in over a decade, it is becoming increasingly difficult, even with no major events, to find earthquake insurance. I've talked to a number of property owners who have gone out and been able to get one bid on earthquake insurance for their commercial property, and that was all there was available. So that is not exactly a vibrant insurance market for that. And in California today, we have had or have burning 400 different fires, which are probably not going to make the insurance market for property insurance, particularly commercial property insurance, more vibrant or more competitive in the future. So what this bill will do is give commercial property owners another option through the risk retention groups that has been successful in the liability area, and I think will hopefully have equal success in the property insurance area, allowing people to have another option of ways to get insurance and make the insurance market more competitive. So I thank you for your work, and with that I yield back.
Do any other members seek recognition? If there are no further discussion, without objection, the previous question is ordered and the vote occurs on the amendment. All those in favor shall signify by saying aye. Aye. All those opposed, no. The ayes have it, appear to have it. The ayes have it. The amendment is agreed to. Are there any further amendments to the bill? If not, without objection, the previous question is ordered, and the question now occurs on approving the bill as amended and forwarding to the full committee or House with a favorable recommendation. All those in favor shall signify by saying aye. Aye. All those opposed, nay. In the opinion of the chair, the ayes have it. The ayes have it, and the bill is agreed to and ordered, reported to the full committee or House with a favorable recommendation. The subcommittee will now consider the committee print of the Securities Reform Act of 2008. The clerk will report the committee print.
Committee print to amend the federal securities laws to enhance the effectiveness of the Securities and Exchange Commission's enforcement, corporation finance, trading and markets, investment management, and examination programs, and for other purposes.
Without objection, the bill shall be considered as read and open to amendment at any point. The chair recognizes himself for 5 minutes to explain the bill. The Securities Act of 2008 will enhance investor protection and improve the regulatory and enforcement authority of the Securities and Exchange Commission. The majority of the provisions in this bill are legislative recommendations the SEC has provided Congress over the last 2 years. Some are merely technical corrections. Other provisions have unanimously passed the House or have passed the Financial Services Committee. This bill has bipartisan support and contains mostly non-controversial sections. We have worked diligently to ensure that the concerns of all interested parties have been addressed and satisfied. I hope that my colleagues will support this sensible legislation. I yield back the balance of my time. Is there any further debate on the amendment?
Mr. Chairman.
The gentleman from Connecticut is recorded. I'm sorry, from Massachusetts. My God.
I'll take Connecticut.
I demoted you.
Mr. Chairman, I have an amendment at the desk.
Clerk will report the amendment.
Amendment to the committee print offered by Mr. Capuano of Massachusetts. International Accounting Rules. At the end of the bill, add the following new section. Section unnumbered, International Accounting Rules.
Mr. Chairman, without objection, I
Securities.
Yes.
ask the amendment be considered read.
Without objection, the bill is considered read, and the gentleman from Massachusetts is recognized for 5 minutes to explain the amendment.
Mr. Chairman, a few days ago, and my hope is that most members saw this, there was a report that the SEC plans to take some steps to, for all intents and purposes, give up the United States' right to impose and oversee its own accounting rules in favor of allowing an international body to substitute our actions relative to that oversight without allowing the United States any say on the matter. Now, this is simply, my concern is based on a news report, and therefore it is premature, and I know that. And just to allay any fears, in case there are any, I do intend to withdraw this amendment because it's a little premature, but at the same time, I thought it was important to discuss the matter and to alert members to be aware, because Mr. Cox, I believe, is scheduled to be before the full committee in the not-too-distant future, and I intend to ask him about these things. But I would encourage members to have their staff do some research on this matter. There are some concerns about giving up some of the reforms that we had after Enron to basically allow companies to change how they report, to falsely claim, or not falsely claim, that's maybe a little too strong, but at least to be able to change how they report and what they report as profits. And then, more importantly to me, in the middle of one of the biggest financial crises we've had in memory, probably since the Great Depression, somehow there's now a move at the last minute of this administration to give up all of our rights as United States citizens to oversee our own accounting rules to some unknown international body. Now, maybe that's worthy of discussion, but I would argue that that's something that Congress should look at and certainly have a lot of say about the matter. And particularly, it is bad timing in the midst of the current crisis we are having. We have the Fed coming in, we have the Treasury coming in. Everybody in a responsible position is looking at strengthening some of our rules to avoid the next financial crisis that is caused by the same problems that caused this one. And all of a sudden, out of nowhere, out of left field, comes the SEC now talking to us about, and now just throwing it on the table, saying, well, we don't need U.S. rules, we need international rules, which I think is ludicrous, I think it's dangerous, and I think it is nothing but purely politically motivated by somebody whose term is coming to an end, whom I had some respect for until I saw this, and I still have respect for him. But this particular gimmick, in my mind, is simply done to put a little check mark at the end of the tenure. And I personally think that this particular proposal needs to be withdrawn. I think if it's going to be done, it should be done after we get through the current crisis and we get some stabilization in our current financial situation, which we don't have. So, Mr. Chairman, that's what this amendment is there for. And again, and as I said, I don't intend to push it today because it is premature and it is based on news reports, nothing more. Nonetheless, I do think it's something that this committee needs to pay close attention to, and I do think that the rest of the accounting field needs to pay close attention to as well. With that, Mr. Chairman, I yield back the remainder of my time.
Does the gentleman withdraw his amendment?
In a minute, I will.
Yeah, but some of us would like to strike the last word of his amendment before he withdraws it.
The gentleman
Move to is one of, I believe, two CPAs on the committee. I do think that this is the level of change, and I'll agree with the gentleman on this, that shouldn't be made by the SEC without congressional hearings, perhaps even congressional authorization. But I will point out that there may be some good reasons for this change. One is that the international accounting standards are in some respects better than our domestic standards, and I'll point especially to the treatment of R&D expense or R&D investment. In one of its first acts, and it's probably its most deleterious, the Financial Accounting Standards Board adopted FASB number 2, which says whatever you spend on research, whether it's useful or not, write it off immediately. So while this Congress invests tens of billions of dollars trying to encourage the corporate sector to do research, the Financial Accounting Standards Board forces and by accounting theory, this is clearly wrong, an immediate write-off of all research expenses. And this was done chiefly for the convenience of accountants, since if you write it off, then the accountants don't have to take a look at it and decide whether it should be capitalized or whether it should be written off. But that's just one example of where the international standards are perhaps better than those adopted by the Financial Accounting Standards Board. But I also believe that we have moved to international capital markets. It would be useful for investors trying to decide to invest in oil companies to be able to compare Chevron to Shell without saying, well, we can't really compare these companies because they're using different standards. So I do think that this may be a move in the right direction, but it's a move that shouldn't be made without a lot more congressional involvement. I thank the gentleman for bringing it up.
If the gentleman would yield for just a second.
I will yield to the gentleman from Massachusetts.
Mr. Chairman, I would agree with pretty much everything Mr. Sherman has said. I didn't mean to imply, and I don't think I said, that all international rules are worse than ours. There are many that I think that are better than ours. However, there are also some international rules that are worse than ours, in my opinion, namely some of the rules relative to investor protection and transparency. That would be some of the things I'd be concerned with. I have no problem whatsoever adopting some international rules or many international rules on a case-by-case basis. Have no problem with that whatsoever, none. I think it's a good idea. I think your comments are right on target. At the same time, I think it's also a mistake to do it wholesale, and I also think, as you also agree, that it's a mistake to do it by an agency as opposed to by Congress itself.
Yeah, reclaiming my time, I could see a circumstance where we allow or mandate compliance with the international accounting rules, but then require certain additional U.S. disclosures. So if Shell wants to seek capital in our market, they wouldn't have to issue a whole set of financial statements based on U.S. rules. Perhaps we want Chevron to meet the international rules. But either way, in addition to whatever might be required by domestic or international accounting bodies, the SEC should demand other disclosures to investors. And I, for one, want to know about companies' investments in the oil sector of Iran. I know a lot of people are concerned about, and I am concerned about, investments in Sudan. And those are some of the factors that will influence investment, not only by small investors like myself, but CalPERS and CalSTRS and others. So with that, I yield back.
If the gentleman from California, Mr. Campbell, seek time.
Mr. Chairman, yes, I move to strike the last word.
So recognized for 5 minutes.
Thank you, Mr. Chairman. I would like to chime in support of my fellow CPA and fellow Californian, Mr. Sherman, the two of us being, I think, the CPAs on this dais. I, too, believe we should take a strong, hard look at the international accounting standards, and I think this is something we're going to have to do. Now, it's easy to say that we're going to do it. It's much harder to implement, as has been discussed, and there are implementation issues, and I think Mr. Sherman's thought about perhaps there are international accounting standards and then we have some additional U.S. disclosures is perhaps a very, very good one that I think merits looking at. But I think we should understand that this is something that we're probably going to need to do and need to figure out the way to do it because, as Mr. Sherman said, you want to compare. The financial markets are becoming increasingly international, and that's not necessarily a bad thing, or whether you think it's a bad thing or a good thing, it is the fact. They're becoming increasingly international, and as investors look across international lines and as companies and markets look across international lines, right now U.S. companies, a U.S. company making a widget and producing its financial statement is not comparable with a European company or a Chinese company or an Indian company producing that same widget. And in fact, in many cases, the U.S. company is at a disadvantage because of U.S. accounting standards right now. And so this is something that we should harmonize for, if we can, for investors, for companies, for U.S. companies as well. And let's understand that what we're talking about here is only public. We're talking about SEC jurisdiction. And so we're talking about only public companies. We don't have to and don't need to change generally accepted accounting principles for private companies. But increasingly, public companies are companies that are competing in an international market or that have international business going on before them. So, I am one who believes, as I sense Mr. Sherman does as well, that we should be looking at a way that we can bring forth and adopt or get are on the international accounting standards, but we need to do it with the proper safeguards. With that,
Chairman, if the gentleman will yield.
yes, I'd be happy to yield to the gentleman
Chairman,
from
I want to be
Massachusetts.
clear. I have not said, nor will I say, that we shouldn't adopt some of these international standards. I have simply said that they shouldn't be done through the SEC or any other agency without congressional input, and I have simply said that they should not be done wholesale simply by giving up our authority, the U.S. authority, the FASB's authority, to oversee the implementation and the interpretation of those rules. That's all I'm concerned with, and that's the proposal that was reported in the Wall Street Journal and the New York Times. And again, I've said earlier, it's only a report. I haven't seen the draft yet, and therefore all my concerns could be answered. But at the moment, if it is simply a wholesale walking away and giving up our authority, maybe I'm wrong, but I think I heard both of the CPAs. And by the way, as a little footnote, I'm a former tax attorney, and my wife's a CPA, so I've kind of been through the tests almost directly, but indirectly. Yeah. And all I'm saying is simply that if we do this, it shouldn't be done by an agency. It should be done by elected officials. It should be done wholeheartedly and thoughtfully by us, one step at a time, so that we get the good and leave the bad. And hopefully maybe convince some of the international people to adopt some of our standards that are higher than theirs. Not all. Some of them are, some of them are not. And that's all I'm saying. I don't think it should be done simply by an agency, particularly an agency at the end of its term, on the way out, simply to make some friends. That's all I've said. And with that, Mr. Chairman.
Reclaiming my time, Mr. Chairman, it sounds to me as though our 2 and now I guess 3 CPA,
2.5.
sort of 2.5 CPA caucus, sounds like there's a impetus here for a hearing and some further discussions on this issue. I think there's some place where everybody can be happy on this, and I yield back.
Sounds good to me.
And now, Mr. Chairman, I'd happily withdraw my.
Gentleman from Massachusetts?
I'd move to withdraw the amendment.
Without objection, so ordered. Are there any further amendments to the bill? The chair seeing none. If not, without objection, the previous question is ordered, and the question now occurs on approving the bill as amended and forwarding it to the full committee of the House with a favorable recommendation. All those in favor shall signify by saying aye. Aye. All those opposed, nay. In the opinion of the chair, the ayes have it. The ayes have it, and the bill is agreed to and ordered reported to the full committee of the House with a favorable recommendation. Without objection, the staff is authorized to make technical and conforming changes to all the bills approved by the subcommittee today. Chair hearing no objection, that's so ordered. There being no further business before the subcommittee stands adjourned.